Hi, Michelle Oddo here with the Oddo Group up at Nova Home Loans, and today we have Caroline Kleckner with Oddo Real Estate, and she is going to answer some questions regarding first-time home buyers. So Caroline, tell us, what's one of the number one questions that you receive from a first-time buyer?
Probably, what do I do first? And I would say to that, you should really talk with a lender because so many people have so many questions at the beginning, and the lender will help clear all that up. So they can help you with what can you afford, what will your monthly payment be, and what will your closing costs be. And after you know that, you can do a lot more as far as looking for homes.
One of the questions I know a lot of people ask me is, do I need 20% down?
Right.
And you don't. So that's the good news, right? I mean, people probably assume that's the case, or what do you hear
I think they just
that?
assume, they don't even ask, and then they don't try to buy a home before that. But yeah, they don't need 20% down. As you know, you can probably speak to that a lot better.
Yeah, I mean, we can do loans with literally 3% down for conventional, and it can be all gift.
Yeah.
And then, of course, we have down payment assistance programs.
So another question I get a lot is, do I really need an agent? Or that I hear a lot. And I would say, a real estate agent can help you in a few different ways. They can act as a negotiator and a coach throughout the transaction for you, which is great. Then during inspection, you want someone there who can negotiate on your behalf and kind of be on your side throughout the whole transaction.
And we see that a lot on the lender's side, where I think without a buyer's agent, the buyer would just be kind of lost in terms of, are these things I should ask for? How much should I ask? Do we let the deal go? And it's just nice to have someone who understands all of that side of the process, right?
Yeah. Oh, for sure. It actually doesn't cost you any money to use a real estate agent. So we're actually paid by the seller, and at Oddo, we actually give you a rebate from our commission.
Oh, nice.
Towards closing costs, as long as it's okay with the lender.
Which we are okay with that. Yeah, that's totally acceptable in the transaction. So Caroline, what about earnest money? Like, is that a question you get? I know buyers ask us that. So how would you explain that?
I think a lot of people are confused. The earnest money you need up front. You need that money in your bank account when you're shopping for homes. And it's about 1% of the purchase price that you're looking at. And that's a down payment that you put down as good faith that you're going to buy the home right when you go under contract. But it, as you know, it comes back as a deduction from your closing costs.
Right.
So it's a deposit towards the end.
Right. Yeah. So if you were doing a 5% down payment or 10% down payment, that would be credited toward at closing.
Right.
And then what happens if something goes wrong in the transaction? Is that money lost, or what do you usually tell people? How do you protect that earnest money? Right.
So the contract is written to favor buyers, and there's a lot of outs for buyers in the contract. So as long as you cancel for a valid reason and it's within the allotted time frame, then you get your money back.
Right. So part of the contract are the different dates and deadlines. So those are places where you could say, we want to cancel this contract based on the insurance not coming in where we thought, or whatever it may be. Yeah. So that's good for people to know, because I know people think, oh, is that money just gone? I give the earnest money and it's gone and it doesn't apply to the deal, but it does. Caroline, what other questions would you say you get from first-time buyers that that maybe these guys want to hear about?
I get a lot of questions about what is title insurance. So the title company facilitates the closing, and they issue the title policy. So the title policy just guarantees that you're buying the home free and clear. They do a search of public record, make sure there's no mortgages, deeds, or liens, judgments, etc. outstanding. So you for sure own the home outright with no encumbrances.
Other than the new loan. So basically when you take over, it's like a clean slate, right? And then they just put the new loan on your title, and that's it. Yeah. So you don't want any pending like IRS liens from the seller or anything like that. Title makes sure that gets all cleared up.
What is included in the monthly payment? Yeah. And do you want to?
Sure, I could, as the lender, I could sure speak to that. Sure. So the monthly payment is going to be your loan amount. So it's the principal and interest on that loan. So basically, whatever note amount you take out on that home, if you bought a house for $200,000 and your loan was, let's say, $190,000, your payment would be consisted of the principal and interest for the loan, 1/12 of the property taxes for the year. So whatever the annual taxes are, we take 1/12 of that. And same thing for the homeowner's insurance, which is your insurance for fire, theft, things like that. So we take 1/12 of the insurance, 1/12 of the taxes, and then the principal and interest, and that's called your PITI payment: principal, interest, taxes, and insurance. And then if there's an HOA, they would have that payment as well. That is typically paid directly to the HOA and not the lender.
Right. So I get a lot of people who are confused that the HOA is included or not included in what you give them, and it's not included. So if you get numbers from your lender or an estimate, then know that you have to add on the HOA payment on top of that. A lot of times people ask me what's the difference of mortgage insurance and homeowners insurance, which you can answer.
Good question. Yeah, that's a good question. We get that too. So homeowners insurance is insurance that protects you, the homeowner. So again, in case of fire, theft, anything like that, that would be your homeowner's insurance that you would go for that claim and try to get paid through the homeowner's insurance if it was a huge cost. The PMI, or private mortgage insurance, really just protects the lender. So it enables us to fund a loan with less than 20% down and be insured that if for some reason the buyer couldn't pay or something came up in a foreclosure proceeding, that mortgage insurance would come in and share that risk with us, the lender. So it is a cost to the buyer, and it doesn't really do anything for them in terms of an insurance policy other than it enables them to put less money down and still be able to buy a home, and the lender will be able to lend on that property. Well, Caroline, thank you so much for coming in today and answering questions for all the first-time home buyers out there that I know have these burning questions but don't necessarily even know what to ask sometimes. Again, Michelle Oddo with the Oddo Group up here at Nova Home Loans, and Caroline Kleckner with Oddo Real Estate. And we hope that if you have any questions, you'll feel free to reach out to us. We'd love to help you. Thanks.
Thank you.